Hi there, welcome to Grain TV. It's Thursday, January 5th, and it was a mixed day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn squeaking out a 1.5 cent advance, closing above 360 again at 361 and a quarter. Beans off 3, giving back some of yesterday's 20-cent advance. And wheat in Chicago posting another strong day, up 6.5, closing around 425 mark in Chicago. News today was kind of light. There was some export business from Algeria. They bought 425,000 metric tons of wheat. None of that U.S., but that was a sizable deal to get some bullish news into the wheat market. Also, probably wheat was helped along by the early week crop condition reports out of Oklahoma and Kansas that showed a very sharp deterioration in the wheat quality ratings there. In addition, drought monitors out of the University of Nebraska were out today showing more drought expansion in Oklahoma as well over the last week. So while not necessarily bullish at this time of year, certainly the shorts that are, or the specs that are aggressively short in the wheat market are probably using some of this to get a little more flat, and especially with January 12th's crop report coming down the line. We'll talk a little bit more about that in a second. But other news, certainly, weather in South America continues to be sort of the dominant topic of conversation. Argentina seen a lot of moisture in the last week, 8 inches over about 30% of the grain belt there, with another 1 to 3 inches expected over the next week. In addition, there is some hints that we're seeing planting delays at the late season or the late part of their planting season. Estimates from some analysts we've talked to down there suggest 90% of the bean crop is planted. That leaves 10% unplanted, and as much as maybe 20% of the corn crop is unplanted at this juncture in Argentina. So with rain, or certainly a lot of rain on the ground and more rain in the horizon for the next week, there may be some trimmed acres out of Argentina. On the other side, however, Brazil seen very good growing conditions. There's talk of potential record yields in some parts of Brazil for soybeans. The only sort of worrisome area right now is the northeast part of Brazil, but even that is expected to get some rain pretty soon. And so overall, Brazil may offset any sort of yield potential losses or acreage losses in Argentina. News out today also centered around EIA's ethanol numbers. Those numbers were sharply higher for production coming in fact, at a record 1.04 million barrels per day. That puts us well above the pace we need to reach USDA's annual forecast. If you look at the chart here, you can see the green line, what we've been doing so far. In black is last year's pace, or last year's weekly production numbers, and the red line is the pace we would need for the rest of the year to meet USDA's forecast. So what this tells us is we're well above pace, well above last year. And so, in all likelihood, I wouldn't be surprised to see USDA ratchet up their ethanol projection numbers in corn use in the January 12th report this time next week. So keep that in mind going forward. Also, looking ahead to that January 12th report, we'll get our first look at winter wheat plantings in the U.S. Certainly traders are probably expecting some sort of drop in acres. No official numbers, no official polls out yet, but probably somewhere between 2.5 to 3 million acre drop in all over in wheat plantings. Most of that coming in the hard red winter wheat states. But one thing to keep in mind, the trade has done a very poor job of guesstimating wheat plantings in this report. They tend to overestimate, and farmers, in fact, tend to cut wheat acres much more than analysts have expected. So that may be a catalyst as we get into that crop report and in the days ahead and in the days going after, if we do get a market surprise. Keep in mind that we cleared a fairly major hurdle today. If we look at the 4-hour bar chart here from our grain hedge trading platform on Chicago wheat, we can see what looks to be a head and shoulders formation that formed around those 392 lows set back in November and then again in late December. And clearing the 420 mark today seemed to be a catalyst. We shot sharply higher, getting up to around 427 before backing off on the close to 425. But this head and shoulders formation would suggest an extension from that 425 neckline, from the 420 neckline up to the previous high back in mid-October of 445, 447. So that may be the catalyst. We have several things here. We have, funds still very short in the wheat market. We have dry conditions in the plains, and we have the potential for a crop report coming next week that could potentially throw a surprise to the market. So all of those factors combined may suggest that this market has turned a corner, at least for the time being, in the next few weeks. So keep that in mind in your own marketing strategies. As always, we're here to help you at Grain Hedge. Take a look at us online at grainhedge.com and take a demo of our trading platform and our email services we put out every day on the comments and technical alerts. Have a great day, and we'll talk to you on Friday.